Let's talk some business, Africa business. Well, you heard that song by Charlie Boy, One Day, Nigeria will be better. The 2021 African Economic Conference is ongoing in Cabo Verde, and the event is jointly organized by the Africa Development Bank, AfDB, the Economic Commission for Africa, ECA, as well as the United Nations Development Program, UNDP. The theme this year is financing Africa's post-COVID-19 development. Professor Kevin Urama joins us this morning. He is Acting Chief Economist and Vice Economic Governance and Knowledge Management of Africa Development Bank. Thanks for joining us this morning, Prof.
Thank you for having me.
Well, I don't even know where to begin. There are so many things to raise with you now in the light of this conference. Sincerely, it's overwhelming. Well, financing Africa's post-COVID-19 development is a good topic, no doubt about that. But even pre-COVID, we had issues of financing Africa's development. What are some of those things that you think were significant issues before COVID that we have to manage better, COVID or no COVID?
Thank you very much. As you've gathered from the conference, Africa has always had challenges with financing for development, in the sense that we've not really had enough capital to support development at a scale that would allow us to achieve poverty reduction targets and all the global goals that countries have to achieve, including the Sustainable Development Goals, the Climate Paris Accord, Agenda 2063, and also the national development plans that are in place across many African countries. If you look at Africa's history of development, deficit financing has been a regular reoccurrence in Africa's economies, especially whenever the price of commodities go down, African economies do go down. So from my side, I see that African economies need to rethink fundamentally how we manage our macroeconomic policies, our fiscal policies, monetary policies, and as well as how we mobilize domestic revenue to support development internally. In all these, when you look at all the figures, all the statistics, we were not really doing very well. And COVID-19 just came to exacerbate it. In 2020, we saw fiscal deficit rise up to 8.4% of GDP. We saw government revenue decline by 10 to 15% of GDP in sub-Saharan Africa. We saw the levels of indebtedness of countries now expected to rise sharply by 10 to 15% percentage points of GDP in the short to medium term. And then currently we see the rate of, percentage of African government's revenue being used for debt servicing rise up to 18%. All these things are not indicators that are positive for countries. And then we also see that even before COVID-19, all the other sources of development finance has been on a downward trend, be it foreign direct investment, portfolio investment, remittances, official development assistance. All these taken together has declined by about 6.5% of GDP in 2020. Remittances, which is a major source of revenue for African people, households for consumption smoothing, and also for investments in key infrastructure like housing and other things in Africa, went down by 6%. So when we look at all these things, we see that there is a need for us to rethink how Africa's financing model, how do we finance development on the continent? Because with a 15% decline in FDI and 10% decline in official development assistance and 212% decline in portfolio investments, you can see clearly that financing for development in Africa needed a clear rethinking, and that was why the African Development Bank Group, the UNDP and UNECA came together to say, let's join forces to bring experts and government practitioners and the private sector together to rethink how we finance development on this continent.
Well, you know,
and it's
what's
very worrying because COVID-19 has just exacerbated this challenge, and the signs are that the medium to long-term effects on many macroeconomic fundamentals like inflation, currency depreciation, trade, investments, and so on are really not going to be very positive if we don't take decisive actions to rethink how we do development. And for me, that rethinking starts from home. African governments need to think home in terms of improving prudence in how we do fiscal and monetary policy management, prudence in our public and financial management, how do we mobilize resources, both tax and non-tax revenues, but also how do we use them? Well, why are we borrowing so heavily a continent that is so...
My sincere apologies for butting in. You know, as you were talking, two things are playing on my mind. And those are things that Africa already has. And one of those areas, the Africa Development Bank is dogged at investing heavily. One of them is the high fives, and talking specifically about agriculture. But another one that I looked at is the humongous mineral resources that we have in Africa. There is a document that I'm looking at by Bright Simmons, titled Africa's Fabulous Mineral Wealth That Isn't All There, says that the total value of known reserves in Africa is roughly $128 trillion. So I'm just wondering, if we have that potentially, how is it difficult for us to finance our development?
Yes, you know, potentials, like I said in the opening, potentials that Africa have are humongous, and the fact that Africa has those potentials and still has to be talking about deficits in its financing portfolio is really very mind-boggling. I always say it's like someone sitting on a pot of gold and begging for money. Africa holds a lot of all the development minerals that are required for development, whether it was in the first, second, or third industrial revolution, or even in the fourth industrial revolution where we are now. Africa is so richly endowed. And Africa is also richly endowed in human capital in terms of the brains, the minds, the youths and women, the hands that can actually leverage that natural capital and turn them into financial capital for development. But this has not been happening because of value chain development. And that is why one of the key recommendations that I would like to see come out of the Africa Economic Conference is not only looking at financing the normal way, but looking at financing in the ways that Africa can harness that natural capital, turn it into assets that we can actually leverage for de-risking investments, assets that we can leverage for expanding our export earnings, forex earnings. And by doing that, we will be able to reduce the need for Africa to borrow so heavily as we are doing at this moment. So just like you're saying, the fact that Africa has that natural capital and is not leveraging it well is a major challenge. And this is why the African Development Bank Group established an African Natural Resources Center that is supposed to help countries in actually turning those natural capital into assets for development. Thank you.
Then it also raises a question of cooperation among African countries. As you said, it's not for a dearth of ideas or capacity. There are those who wonder why, despite its potential, despite its population, despite its capacity, intra-Africa trade is still abysmally low. How is this economic conference going to help with that?
Boosting intra-Africa trade, intra-regional trade is a key aspect of increasing financing for development in Africa. Currently, intra-regional trade in Africa is just about 15 to 16%. If we raised that, even just by 1%, we raise billions of dollars in financing available for development on the continent. So this conference has tried to look at ways that African countries can help to boost the real economy, because trade is only when you have something to sell. So we need to boost our productive capacity in terms of in agriculture. We need to also boost the infrastructure that allows for inter-regional trade, the roads, road networks, the logistics, and all the things that are required to facilitate trade and reduce the cost of moving goods from one country to the other. But we also need to look at policies about borders in terms of our immigration policies, access policies, but also monetary policies in terms of how we do transfers between one country to the other. So these are all ideas and areas that this conference has looked into, and I'm sure that very concrete recommendations will come out at the end of today from the mass of experts that we have brought together to look into this question.
Talk about Africa trade, and one of the Africa trade, or rather intra-Africa trade, also would raise the issue of intra-Africa travel, because if we are going to facilitate trade, we have to facilitate travel. What's your perspective on that?
Now, facilitating intra-Africa travel is always linked to our immigration policies in terms of how easy it is for mobility of labor, mobility of people from one country to the other. And that is why the African Development Bank and the African Union a few years ago launched the Africa Open Visa Index to be able to allow for that unity in terms of Africans being able to move from one country to the other. And we can see this has been improving quite well over the years, and many countries still need to do more in terms of opening up their countries and their markets for our colleagues from all African countries to be able to access their markets. This will open the market so that we have over 1.2 billion people to be able to access and increase the volume of trade within the continent. But it also involves infrastructure investments. We need the roads, we need the ports, we need the airlines to make travel between African countries a lot easier. You would agree with me, even traveling to Cape Verde for this conference involved a lot of logistic challenges for us as organizers, because people had to have several stops to travel from a nearby country to Cape Verde. So we also need to invest in our airlines, we need to invest in airports and so on. And the African Development Bank Group has been at the forefront of doing that, investing in Air Cote d'Ivoire, investing in several airports across Africa. We need to scale investments in those areas, because those infrastructure forms the basis for enhancing the intra-regional trade that we're all talking about. Thank you.
Well, you do have a lot of work on your hands, Prof, on this matter to ensure that we get to the level of economic governance and knowledge management that we have. But let's talk about this conference for a bit. I understand that there are 3 sub-themes at least, being considered. Domestic, public, and private resource mobilization in the era of the digital revolution. The second one is leveraging international, private, and public financial system for Africa's development, and towards resilient recovery and sustainable development with a renewed financing. And I'm wondering, within its 3 short days or so, how much of this are you going to be able to cover, and how much will we be able to use afterwards?
Thank you very much. I'm really very impressed with the innovativeness and the ability of the delegates to think outside the box in terms of pushing the frontiers to not only look at what we already know that we need to do based on economic principles, but also what we need to do more in order to be able to harness development finance for Africa. Let me just give you a few highlights of the things that has come out. I mean, of course, this is known, but good governance and prudent macroeconomic policy actions that are required have been itemized, in this conference, because the fundamentals, the basis of success is for countries to think about how to prudently deploy fiscal and monetary policy actions in order to stimulate the economy and allow the economy to allow markets to function. So that's one key recommendation that has come out. This is always known, but this is something that many African countries are already doing better in, but we still need to do more in moving that forward. Specifically, the issues around public finance and debt sustainability management has come up very frequently in this conference. We need to make public and private debt work for productivity in Africa. We should try to step away from borrowing for consumption to borrowing for investment in productive investments that can allow African countries to have a yield curve that can repay the loan and still be able to have some development benefits for the continent. And in that area, there are several discussions that has gone on in terms of enhancing domestic revenue mobilization. Simple things like adopting integrated tax administration systems, single revenue accounts, digitization of the tax system to allow for transparency and accountability, and also, more interestingly, devolution of power in terms of the authority to collect and use and also account for public resources on the continent, with the consensus being that by devolving more to local governments, you bring responsibility and accountability closer to the citizens and you make corruption less possible. And so that's also something that is very fundamental that has come up. And this goes into the questions of the types of governance we have through federalism and so on and so forth. A lot of discussions has happened in that area. But also deepening financial markets, capital markets in Africa. COVID-19 has taught us that relying on global markets can lead to a lot of vulnerabilities when there are these types of shocks. So African countries need to focus on deepening financial markets as much as possible. But another point that has come up in terms of is government-enabled private sector-led development. We need to create policies that allows private investors to come in and feel confident that our countries are destinations for investment that is going to allow them to get the high yield that investments in Africa is without so much risk. So, and the
apologies, Prof.
Partners like the African...
My sincere apologies, Prof. You know, you're saying some things that are really very exciting, and I really wish I could be there with you at Cape Verde. But the question that comes to mind, you know, when you going by the last point that you raised is, I wish we could have a timeline. Okay, after this conference, we're going to create a timeline and kind of monitor things to ensure that these things really do happen, because they are definitely quite exciting. But you know, the question that comes to mind, you know, from some of these things that you've said, is the inclusion of youths in the whole spectrum, because futuristically, they are the ones that are going to run things 10 years from now, 15 years from now, 20 years from now. The 20-year-old is going to be 30, 35, 40. So I don't know if this conference has in any way also factored in that perspective to ensure that in the designing, in the policy formation, there is inclusion of the young people on the go, especially since one of the talking points to digital revolution, where they operate the most.
Thank you very much. And you really have pointed out the major action point in terms of digitizing markets. And I say this from my past job in the African Technology Policy Studies based in Kenya. I found out with very great excitement that African youths and women have highly technology savvy. I would say better than any other set of youths and women that I've worked with or seen around the world. And if you think about the digital inclusion and fintech that is already developed.
One listening to us and watching us right now who would disagree, we can only wait for not only the conference itself, but the fruits that it will yield for the continent. Professor Kevin Urama, Acting Chief Economist, Vice President for Economic Governance and Knowledge Management, Africa Development Bank. Thank you so much for all you do, and all the best. So Sunrise continues in a moment, and we're talking about a vital aspect of character.